Hello everyone and welcome to my morning report analysis videos on Monday 25th of June with me, Richard Perry, market analyst at Hantec Markets. We have a slightly dollar positive move, but generally speaking what we're looking at is a market whereby we're fairly risk off at the moment. What we have had over the weekend is a suggestion from Donald Trump that is again sort of adding to this whole trade tariff concern that the traders have by him suggesting that they're going to be targeting European Union automakers. So that's going to be a move that really does hit the DAX, for example, disproportionately. Because the DAX has quite a large degree of automakers. You've got Daimler, you've got BMW, you've got Volkswagen, all in that index, and certainly the DAX is underperforming today. Although generally speaking, across those indices, they're all pretty much at least around about % or so lower. You can see here that the dollar is stronger across the forex majors, with the one real exception of the yen, whereby safe haven trading, the yen outperforms. Interesting that the euro is only slightly lower, and that is sort of reflective of the fact that the euro has been trading more positively in the last couple of sessions anyway, up until today. Also we've got gold, which is sort of hanging on. Now the other big factor would be oil. Oil market continues to react. As you can see down here, the oil market continues to react to the OPEC decision. And look at that, Brent crude down 1.2%, WTI up 0.5%. And that's sort of coming as, sorry, that's not it. That's coming as we've seen OPEC sort of suggesting over the weekend that, well, the Saudis were suggesting that there was going to be possibly a real impact on the market of around about 1 million barrels per day being added back in. So that's subsequently why the Brent crude opened sharply lower today. WTI remains supported, and seems as though that the main move is to tighten that spread of WTI versus the Brent crude, and you can see that here. It's unwound from $11 odd to $5 odd in the last sort of few weeks. So really significant move there. But yeah, just generally speaking, what we have got is this dollar that has just ticked higher slightly, but again, it's if the yen continues to strengthen and the euro remains supported, you can expect that to move lower. So what about today? Well, not a great deal. US home sales at 3 o'clock is the only real event to look out for there, and that's expected to be at 665,000, so basically very slightly higher, but 1.5% higher than last month. So my chart today is the Kiwi versus the dollar. Now this is interesting because I think that the dollar could be on a little bit of a corrective move, and you can see here on the Kiwi whereby you had Thursday's move, which actually ended up being a bull hammer, continuing on Friday. A bit of a consolidation today, nothing too decisive though, but look at these momentum indicators. Stochastics crossing higher, MACD lines already sort of beginning to bottom out, RSI having ticked higher. So it looks like there is certainly the possibility that this could be starting to turn around again, and that's what I'm sort of looking at on the hourly chart, whereby you've got this resistance at 69.20. This is a key level because this obviously is a pivot on a near-term basis, and if you can see the Kiwi dollar breaking above 69.20, that would complete this head and shoulders reversal pattern, which you could then measure 68.20 to 69.20, around about 100 ticks. 100 pips of further recovery, so that's 70.20 area. So there is some fairly decent prospect of a recovery, and that 70.20 would be up towards this high again, and then you start to think about the prospect of a bigger base pattern. But certainly for now, 69.20 is the key level to look out for. It's sort of backed away from that this morning, had a look at it and then backed away. But you've got this support around 68.80. 68, 80, 69 figure around there. So I think that what we need to see is continued sort of recovery, but the momentum indicators on the hourly chart certainly suggest that having been so negatively configured for so long on the MACD lines and the RSI, we've seen the the MACD line is sort of going above neutral, and if they can hold above neutral, if you've got the RSI that holds above 40, that would suggest there is a shift in sentiment building on the Kiwi dollar. So this is definitely something to watch, I think, in the next day or so for a possible recovery. So with that in mind, I wish you good luck in your trading today, and I'll speak to you later.